Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. Democratic socialist Zohran Mamdani sweeps to victory in New York, becoming the youngest mayor of America's biggest city in 100 years. Elsewhere, Trump's Republicans suffer defeats in key local contests as the government shutdown becomes the longest in history. Global stocks fall for a second straight day on worries over lofty valuations for chip stocks. But Chinese markets tip into the green as Beijing suspends tariffs on US farm exports. Plus, European corporate heavyweights in focus this morning with earnings due from Novo Nordisk and BMW this hour. So it was a brutal session on Wall Street yesterday, with the Nasdaq closing lower by more than 2%, the S&P losing more than 1%. Is this the start of a healthy pullback or something of a deeper sell-off? The sell-off, when you look at the futures, the US futures and European futures, pairing some of the heavier losses, so maybe there's a bit of stability, maybe there will be dip buying that comes back. US futures still in negative territory, though, after the losses of yesterday. S&P futures pointing low by 0.3%, Nasdaq 100 futures pointing low by 0.4%. $500 billion wiped off the Philadelphia Semiconductor Index just yesterday alone. European futures, after losses of 0.3 yesterday, pointing low by 0.8%, a bit of a catch-up to the sell-off that came through on Wall Street. FTSE 100 futures here in the UK looking to drop 31 points. Let's flip the board and have a look cross-asset. There has been a move into safe havens. Treasuries are bid, gold as well, and the Japanese yen. 153 on the yen, just up 0.1% versus the US dollar, but it has benefited to some extent from that risk-off move. 406 right now on the benchmark US 10-year, which was bid yesterday as well, along with the selling of equities moves into treasuries, and that continues marginally in the session today with yields down close to 2 basis points. Bitcoin crossed below $100,000 yesterday, 101,000 right now. A big knock to crypto after the last few days, just gaining 1.5% so far in the session, but you would have gained almost as much by exposed to treasuries year to date as Bitcoin, gaining just around 6% so far year to date. Today in the session at 1.5%. Gold just below $4,000 per troy ounce, up 0.9% so far in the session. Again, benefiting from that haven move. But the US politics is firmly in focus, and some pretty remarkable results coming through in the last hour or so. Big gains for the Democrats after Zohran Mamdani wins New York's mayoral election, beating former Governor Andrew Cuomo and Republican Curtis Sliwa. During his victory speech, Mamdani challenged President Donald Trump, saying the city is helping dismantle the very conditions that gave him power, while Andrew Cuomo addressed a booing crowd, calling the Democratic win their night.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how we stop the next one. So, Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Congratulations to Zohran Mamdani. No. That is not right. That is not right, and that is not us. That is not us. Tonight was their night, and as they start to transition to government, we will all help any way we can, because we need our New York City government to work. We want it to work for all New Yorkers, because our city is the greatest city in the world.
While the celebrations continued for the Democrats, winning governor races in both Virginia and New Jersey. Bloomberg's Kriti Gupta joins me now, has been watching all of the results. Kriti, what does the Mamdani win signal then, historic in its nature as it is?
I mean, historic in that it's the first Muslim mayor. It's the youngest mayor we've had in the 400-year history. I say we as I'm claiming my New Yorker title despite living here in London.
Can do that.
I think I'm going to. And then, of course, the first of the South Asian descent as well. So he's breaking several records here. But I think what is perhaps most at the top top of everyone's mind is that he is coming. He's not just a Democratic candidate. He's a Democratic socialist candidate. And this is really crucial because at a time where the American electorate, and I would argue the global citizenship, is really very sensitive to the cost of living, affordability to energy costs. And New York has one of the biggest affordability problems famously in the world, but also recently, just given that you have seen rental prices increase, you have seen food prices increase. So the people in America who are feeling the pinch and feeling the kind of pressure on their paycheck every day, a lot of them are coming from urban cities like New York. So he's coming in, running on a campaign that suggests universal health care, free groceries, rent freezes for rent-stabilized apartments, which is a big, big issue in New York where there is a massive housing shortage, and pushing those prices up. He is also talking about taxing the wealthy, and this is where you start to see a lot of Wall Street folks get a little bit nervous. He's talking about increasing the tax on people who make $1 million or more a year. Now, given that New York City is the financial capital of the world, there are a lot of people in New York City who make above $1 million. A lot of people who don't make $1 million. That wealth gap is basically what he's trying to address at the same time while addressing the city's kind of finances, because at the end of the day, the infrastructure of New York City is also very old, is collapsing, and needs quite a bit of help. So he has quite a lot of things to accomplish here. But ultimately, I think it really speaks, and you heard it in his speech, he's addressing the very concerns that, frankly, helped Donald Trump win as well, because Donald Trump also ran a year ago on the promise of making life more affordable for Americans. It's just interesting the pendulum is now shifting in the Democratic camp about a year later.
And Mamdani is front and centre this morning, but there were also victories for the Democrats in Virginia, in New Jersey, but also redistricting in California as well. Yeah. Talk us through the implications there and what's come through on this night of success for the Democrats.
Well, this ends up becoming a global story because at the end of the day, I think a lot of the financial audience and the global audience is looking for signs of what power Donald Trump will have in the remainder of his term in the White House. So he has about, we'll call it 3 years to go. There's still a little over 3 years to go. He still also has to go with the midterm. So in about a year's time, we have the midterm elections, which could really change the makeup of Congress. And this is significant because a lot of the things that Donald Trump is passing include a potential shutdown aversion bill. Right now, he has a Republican majority in both the Senate and the House right now. So anything, well, I should say in the House, in the Senate, it's tied. So right now, he is able to pass legislation fairly easily relative to some of his predecessors. If this is a litmus test, what you're seeing in the Virginia special election and the New Jersey special election, both of which have gone to Democratic candidates, as a suggestion that maybe in a year's time you could see the pendulum again shift more to the left, could that then change the congressional makeup and make his legislative ability a little bit harder? It also brings up the question of who could be frontrunners, not just in 2026, but in 2028 as well. And by this suggestion, again, we're only a year into Donald Trump's presidency, it is starting to suggest that some of the very issues that got him elected are also the ones that are quite literally helping support some of his rivals on the other side of the aisle.
And with potentially 5 additional House seats for the Democrats out of California. And we'll see how that unfolds during the midterms, of course. But today, the focus on New Jersey, New York, Virginia, of course, and California. Kriti Gupta breaking it all down for us on a day, of course, when the US government shutdown enters a record 36th day. Kriti, thank you very much indeed. Let's turn our focus back to the markets and see how things are faring then in the Asian session after a very challenged day on Wall Street. Winnie Su is in Hong Kong. Winnie, what's standing out to you?
Yeah, it really is a sea of red in Asian markets today, as you mentioned. So, it is mainly dragged down by the concerns around the high valuations of these technology shares. But not just that, beyond that, also the prolonged U.S. government shutdown you talked about just now, and these Wall Street CEO earnings as well. Here on the board, you can see that the MSCI Asia is now down 1.2%. So very volatile session today because we did pair some of the earlier losses. And it's, we are seeing a bit of a dip buying coming into the market. Investors have also been buying these haven assets. You see the Australian bonds being bought and also the Japanese dollar strengthening a bit. Now we flip the board and take a look at what's going on in the South Korean market because that's where we're seeing the most actions when it comes to the Asia session. The Kospi here now is down slightly more than 3%, but earlier today it was down around 6%. So lots of volatility volatility there. Here on the screen, you can see chip makers, including SK Hynix and Samsung, also leading losses. So based on our calculation, the Asia chip makers, along with the SOX index yesterday, wiped out a combined 500 billion of market share. So, that's what's been really driving markets today. But also similar story when it comes to the Japanese market. If you flip the board and take a look at the losses there, because we are seeing both the Nikkei and the Topix down. Yes, we are erasing some of the losses from earlier in the session, but still Nikkei leading more losses compared to the Topix just because of the drag of these technology-driven names, especially here on the screen again, SoftBank and Advantest leading losses here. Now, we've been talking to fund managers throughout the day, and many have been suggesting that this is not yet the best timing to buy the dip yet because more corrections may be coming, and they are still watching opportunities for further buying. Back to you, Tom.
Winnie, thank you very much indeed. Look at that move on SoftBank, down more than 10%. Winnie Su in Hong Kong, thank you for that update. Let's get to the semiconductor space then. AMD, the main contender, of course, to NVIDIA in the AI chip market, a rival, still a large gap between the two, of course, in terms of market share. But AMD failing to impress investors with its latest revenue forecast. AMD then joining the global sell-off in semiconductor stocks on concerns over lofty valuations. We're joined now by Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. Matt, we really appreciate your insights this morning on what was another significant day for the tech story in the semiconductor space, particularly on the downside. AMD actually beating in terms of its results, but it's all about the forecast and just not matching the highest end in terms of some of the analyst expectations.
Yeah, that's right. I think, probably if you're at the AMD management team, you're kind of wondering, what do we need to do to kind of get the kind of share support? Because as you say, the numbers themselves were pretty much a little bit ahead of expectations, I think, and they beat where people expect them to, which is in terms of demand for like the kind of PC and the server side of it. And we'd seen that in Intel already, so kind of think it was what people were expecting. And as you say, the kind of range they gave for the forward quarter guidance on revenue was better than expected. As you say, I think, some of the more optimistic analysts were kind of stretching the top end of that. And so, I think if you had to point to something, it would be that. I think that AMD is expected to be the kind of big challenger to NVIDIA's throne on the AI accelerators. They are making progress there, but I think, the expectations in the background have been that the people want to see quicker progress than that they're making, and they didn't quite live up to those expectations. And
the Philadelphia Semiconductor Index falling, or at least seeing about $500 billion of market cap wiped off just yesterday. NVIDIA earnings out later this month, always slightly later than most of the earnings coming through from the US. How much should we read across from AMD to NVIDIA? Does NVIDIA ride to the rescue with its own earnings in terms of the sell-off that we've seen across the chip space?
Could do, but I think it would be probably quite specific to NVIDIA.
Right.
I think what the market will be looking for is another kind of very optimistic outlook about the mid to long term from NVIDIA. But at this point, given where valuations are, it's difficult to see what they can really do. I mean, what we need to see is more tangible near-term progress, not more kind of optimistic talk about the mid-term. And I think it's going to take a little bit of time for some of this stuff to ramp up. Obviously, NVIDIA's a kind of direct or secondary beneficiary of a lot of these deals that OpenAI is doing. But a lot of those won't ramp up fully until we're into next year. So I think, there's a bit of a kind of reality and expectations gap at the moment that needs to be filled.
Yeah, and that was pronounced yesterday when it comes to AMD, wasn't it, Matt? Matt Bloxham, thank you very much indeed with the latest in terms of the semiconductor space, the chip moves, of course, the tech moves, and AMD front and centre as we look ahead to NVIDIA later this month. Here's what else to think about today, though. 6:30 a.m. UK time, a big earnings update from Novo Nordisk, of course, one of the most valuable companies, despite the around 50% drop in the stock year to date. We will be breaking that for you and bringing you a key interview as well from Novo. And at 6:30 a.m. UK time, we'll also be breaking earnings from BMW, the German automaker, of course. At 8:30 a.m. UK time, it is the Riksbank decision as well. So a central bank decision there from Sweden. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, Dayb Go. And, of course, the sell-off, the equity market sell-off, but also US politics front and centre. Coming up, Siemens Healthineers reporting fourth quarter revenue that slightly missed estimates. We're going to be joined by the CFO of that business, Jochen Schmitz. Next, this is Bloomberg. Welcome back. We've had earnings coming through from Siemens Healthineers, the Frankfurt-listed business, coming through with fourth quarter revenues just below estimates, 6.32 billion euros. The estimates had been for just shy of 6.5 billion euros. In terms of adjusted earnings, 1.1 billion euros, just a little softer than the estimates as well. Let's bring in the CFO right now for a view on how this positions the business going forward. Of course, the maker of health devices with big exposure to the Chinese and US markets. Jochen Schmitz, thank you very much for your time, CFO of Siemens Healthineers. Jochen, how challenging is the environment right now? We have the tariff regime with the US, of course. We have an anti-graft crackdown in China. What's the biggest headwind at this point?
Maybe before we go there, first of all, I'm very happy what we achieved in this fiscal year. We got to our guidance well. Yeah, we ended up at the upper range, end of the range on revenue growth on a comparable basis, as well as on earnings. So a good finish to a very, very good year. Now, talking about the challenges, obviously tariffs are in general a topic for global companies, because ultimately it limits the flow of goods and services, but also of knowledge, and that will be to the detriment of patients, and it created also financially for a certain period of time a headwind to us. Secondly, on China, China was coming in as expected for us. We have also for the future de-risked our outlook on China, so we expect no big change in the near future. But what is important, we still believe that the Chinese market will come back at some point in time, and then will be also a source of healthy growth for us.
Could you quantify for us the tariff impact on the bottom line for the fiscal year that closes out in September?
Yeah, for sure. We had a headwind of about 200 million euros in fiscal year 2025, and that is primarily affecting two businesses which have a lot of value add in Europe and sell a lot of good stuff in the United States. And we expect for this fiscal year, or fiscal year 2026, roughly double the amount, 400 million.
What are orders out of North America looking like? Your competitor Philips is seeing a bit of a pickup in terms of that region. Are you seeing a similar story?
We are very, very happy what we see in the US market. When you look at our equipment book-to-bill ratio for last fiscal year, it stood for the full fiscal year at 1.14. That means 14% more orders than revenue. I think it's a very strong number. I would say clearly leading the pack in the industry, heavily supported by our success in the US market, in a very healthy market. And we see this, we see a lot of good prospects there. Yeah? So very good.
Would it help in the US to have a major production facility when it comes to those conversations with the Trump administration about tariffs? Would it help to have those kind of investments in the US market?
I mean, first of all, when you look at our value add structure, we have more employees in the United States than we have, for example, where our legacy comes from, out of Germany. We have 2 of our 4 segments headquartered in the United States. And even if you double click on imaging, we have 2 of our 5 product lines in imaging headquartered in the United States. So it's significant value add. When we look at value add structure and how to mitigate tariffs over the midterm, I think it will relate more or less to 3 things. Yeah, we will look into, I would say, market adaptive pricing. Yeah, we will look into tight cost management, obviously, and we also have, I would say, all the means in our hand to think about potential value add shifts if they make economically sense. Yeah.
Okay, interesting. You make and sell MRI scanners, of course, and you need those batteries, or those magnets, I should say, for those machines. Are you seeing any supply constraints from China when it comes to those magnets?
No, not for the superconducting magnet. They are not dependent on rare earth materials coming from China. We have very, very small topics on certain motors, which also need magnets. Yeah, but I think we have for most of the stuff our arms well around it, and we are not a large user of rare earth material. Yeah? It's a smaller portion of what we do. Yeah.
Can you give us an update in terms of the potential spin-off that our team has reported on at Bloomberg around the diagnostics segment of the business? Have you made any progress on that front? What kind of investor would make sense for that business?
I mean, first of all, we have never said that we want to divest that business. Yeah? We have a clear transformation agenda for this business. Yeah? When you look at our 4 segments, 3 are clearly market leading by top line, by bottom line, and diagnostics is a strong number 3 in the market. We are going through a major transformation in this business. We change the most important platform in the industry in clinical chemistry and immunoassay to the platform called Italica. This is moving very, very well. Yeah, and we are over the years now improving bottom line. We came from break even. We are meanwhile in the high single digits, and this transformation is working well. And we give the business the freedom it needs to get back to where it deserves. Yeah?
Okay, Jochen Schmitz, CFO of Siemens Healthineers, on the back of those results. We appreciate your time this morning. Thank you very much indeed. Coming up, China suspending some tariffs on US goods in a sign of further easing of trade tensions. We're going to have the details next. This is Bloomberg. China says it will continue to suspend its 24% tariffs on some US goods for 1 year, starting next week. For more, we're joined by Jill Decisive, our senior editor in Hong Kong. Jill, what more do we know about this? The announcement then on levies related particularly to US farm products. How significant a move is this from China to de-escalate?
Yes, that's right, Tom. So this is essentially a confirmation of some of the big things that we had heard out of the Trump-Xi meeting that happened last week. So what this latest announcement does is essentially confirm that they're going to be suspending China, meaning they're going to be suspending these retaliatory tariffs on U.S. products, including soybeans. There was some other things included in there as well. I'm looking at corn, wheat, some types of chicken. So these are all tariffs that it seems were, or these are all measures that it seems were essentially agreed on during that Trump-Xi meeting, trying to de-escalate tensions here, really kind of ramping back, what we've been seeing is this escalation of tensions over the last several months. So I think at this point, this is all something that we can really expect to, continue to be part of this easing of tensions going over the next year. Remember, as an outcome of that meeting, these two world leaders essentially agreed that they were going to put on pause for the following year, a lot of the most major issues that they've really seen. I will, though, point out, though, that, Tom, there's still, when you're comparing the statements and the various announcements that have come from China versus the U.S., it does seem like there's still some question over what exactly is happening with some of these rare earths measures. Remember, these are critical minerals China has a large supply of, that they've been restricting and curbing the export of. While there are some retaliatory measures that China launched in October that have been scaled back, I think there's still an open question as to whether China is actually going to follow through and sort of rescind some measures that they had announced earlier this year. The U.S., I think, certainly expects them to. So, we see this trickle of new announcements that's coming out of China that, again, does seem to be upholding a lot of what was agreed during that Trump-Xi meeting. We'll see if there's going to be more that, essentially confirms that at least there's not particularly high tensions at this moment.
Jill Decisive out of Hong Kong, thank you very much indeed for that update. Meanwhile, President Trump says he's held trade talks with Swiss officials, and there are more discussions ahead with his trade representative, Jameson Greer. Donald Trump has slapped a 39% tariff on goods from Switzerland. Pharma makes up nearly half of Swiss exports to the US. Pharmaceuticals, of course. Other key sectors include chocolate and watches. Coming up, Danish drug maker Novo Nordisk has seen its shares fall 50% this year as competition in the weight loss space heats up. The company reports crucial earnings in just a few minutes' time. We will bring you those numbers as they cross the terminal. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Democratic socialist Zohran Mamdani sweeps to victory in New York, becoming the youngest mayor of America's biggest city in 100 years. Elsewhere, Trump's Republicans suffer defeats in key local contests as the government shutdown becomes the longest in history. Global stocks fall for a second straight day on worries over lofty valuations for chip stocks. But Chinese markets tip into the green as Beijing suspends tariffs on US farm imports. Plus, European corporate heavyweights in focus this morning with earnings from Novo Nordisk and BMW crossing the terminal right now. Let's start on Novo Nordisk. The stock is down about 50% year to date. The competition with Eli Lilly and the bidding, of course, for the drug maker Metsera. Novo seeing full-year operating profit at a constant FX level increasing between 4 to 7%. Here's the redhead then across the terminal. Full-year sales. Novo sees full-year sales increasing between 8 to 11%. So at the high end of the range, up 11%. That is slightly below the previous forecasts in terms of the top end of the range. They had forecast sales at a constant FX rate of between 8 to 14% growth. Now they've moved that slightly lower to between 8 to 11%. So that is a key redhead for Novo Nordisk. The stock, of course, down around 50% year to date. Full year operating profit, again, seeing full-year operating profit in a range of between increases of 4 to 7%. Wegovy sales coming in slightly below the estimates in the third quarter, and we know that's key for analysts as well. We're going to be speaking to the CEO of Novo Nordisk at 9:15 a.m. UK time. A crucial conversation for you not to miss. So mark that one in your diaries in the next couple of hours. BMW, meanwhile, coming through with a focus on the margin story. Third quarter margins coming through with BMW, 5.2%. 5.2% is the margin in the third quarter, slightly softer than the estimates. The stock is up about 7% year to date. The competition, of course, from Chinese competitors, but also the potential tariff impact is a factor for this company. In terms of revenues, they came in slightly below the estimates, 28.5 billion euros in the third quarter, the auto revenue, versus estimates of 28.8 billion. Sales coming in a little softer as well. So it's a miss in terms of revenue, modest miss, and it's a modest miss in terms of sales in the third quarter for BMW, 32.3 billion euros, slightly below the estimates. Again, it's the guidance around the margin that will be interesting when it comes to the earnings call. In the most recent quarter, the margin a little softer than the estimates. Let's get to the broader markets right now. And earnings will, of course, be a factor. But you saw a significant sell-off in terms of US stocks yesterday. The Nasdaq 100 closing lower by a little over 2%. The S&P closing down by 1.2%. Futures looking to further losses today, but they have paired some of the heaviest selling. So maybe this sell-off and this pullback is starting to moderate right now. European futures pointing lower by 0.5%. Here in the UK, FTSE 100 looking to drop 12 points. S&P E-mini is currently flat. Nasdaq 100 futures lower by 0.1%. Again, it's a less ugly picture than it was at 4 a.m. this morning when I got on at least. Flip the board and have a look cross asset. You have seen a move into havens. The yen has benefited, as has gold. Interestingly, Bitcoin, after dropping below 100,000 yesterday, is currently up 1.7%. The US 10-year treasuries have been bid as well. Stabilisation in the treasury market right now, fairly insignificant moves right now, having seen a bid for treasuries yesterday, 407 on the benchmark 10-year. The yen is largely unchanged, and gold is up close to 1%. Let's go to take now and a deep dive on the market reaction. The market action yesterday. Lale, Akoner, market strategist at eToro. And I want to start on yesterday and how it ties into the moves that we're seeing today. Again, the future story is less bad than it had been earlier this morning, but the sell-off was pronounced on Wall Street yesterday. What for you stood out? What do you think is the key catalyst? Is it valuations? Is it concern about Fed? Is it the earnings mismatch in terms of expectations? What for you stood out in terms of yesterday's sell-off?
Yeah, I think several factors. As we know, the market is priced for perfection, so that's number one. If you are giving less than stellar earnings guidance, then your stock price is going to suffer, right? The second one is obviously election uncertainty in the U.S. And the third one, I would say, monetary policy uncertainty, both here in the UK, but in the US. So I would say multiple factors coming together to put some pressure on the markets. But I do believe that breadth is still very strong. Equal weighted index is still trending higher. On a long-term basis, we have more than 50% of S&P 500 trending above their 200-day moving averages. It's just some parts of the market we need more participation. Consumer names, in my opinion, oversold, both on the discretionary and staple side, and obviously energy names are quite weak.
So was this a healthy pullback that we're seeing? Is it a healthy pullback, or is it something a start of something more pronounced in terms of a deeper sell-off?
I would say it's a healthy pullback just because fundamentals are very strong, right? So we are expecting 11% for S&P 500 earnings growth for this year. Put on top of that 4% of Atlanta GDP Now tracker, which is a high-frequency tracker for the U.S. economic growth. That tells me that actually the corporate America sees a soft landing plus disinflation, right? So I think any pullback here would tell us that, a dip buying could come. And we've seen also gold as well, starting its uptrend as well. So I think, again, a healthy pullback. Fundamentals are strong, monetary policy easing, fiscal policy easy as well. They will come more to the picture in terms of seeing it in macro in the next year.
It's interesting that you focused in your first answer on breadth and that being a positive, because so many analysts that I'm reading are saying they're concerned about the concentration of the gains in a small number of mega cap tech names. But that's not a picture that you're seeing.
I don't see that. I think, again, some of the names need more participation, such as consumers, such as energy, such as healthcare, such as staples. But again, the tech names are getting obviously much of the headlines. But and also we need more participation from Russell 2000, given the fact that the environment is so positive for Russell 2000. Given
is the environment positive for those small cap names if the Fed is on hold in December?
Well, the Fed also said that they will end QT at the end of this year, basically. So that tells me that that's very positive for these small and mid cap stocks. Overall, easy monetary policy is still in place, and fiscal policy. The tax bill allows expanding of R&D, of capex, of interest rate deductions as well. These are all very positive for those very R&D intensive firms in small and mid cap names. So I would say that yes, and obviously they are very reliant on short-term debt as well. So any easy policy would help.
What have we learned from this earnings season, Lale?
I think we learned that, again, overall, earnings growth, again, at 11%, quite healthy. Tech names are either guiding higher capex or higher spending. What is going to be more important for us is how that spending will be funded, right? So we are seeing it funded by cash, but free cash flow growth ex-Nvidia is negative for these big tech names. So many of them will go to the public markets, and more worryingly, they might go to off-balance sheet. So that's what I'm worried about more than the capex headlines, is how are they going to fund these expenditures.
Okay, that's interesting. So look for the off-balance sheet funding from some of these big tech players as they're trying to fund that build out. Before we let you go, that links maybe to a question on what's happening in the credit space, and that debate continues around whether or not these are ring-fence risks or something more systemic. Where do you stand on the kind of bankruptcies you've seen in the auto space, Tricolor and First Brands? Is that idiosyncratic, or is there a bigger risk in credit at this point?
Idiosyncratic at this moment, but as we move closer to the end of the cycle, and as we will see the Fed start to tighten rates, then they could become more systemic in nature. I'm not too worried about it right now because we're in overall easing monetary policy cycle at the moment. There are some, obviously, pockets of risk, such as subprime auto, distressed commercial real estate, some pockets of consumer credit as well. But I wouldn't call that a systemic risk at the moment, given, again, that we are in an easy policy cycle at the moment.
Lale, thank you very much indeed with your insights on these markets. And a healthy pullback, that's the view from Lale Akoner, market strategist at eToro. Now, on the earnings story, and a specific name that stands out to us this morning, of course, Novo Nordisk has pared its forecast for a fourth time this year, citing lower than anticipated sales of its blockbuster drugs Wegovy and Ozempic. Sarah Sjolin, Bloomberg's Copenhagen bureau chief, joins me now for the details. Sarah, what stands out to you then from the third quarter earnings from Novo?
I think you just mentioned a few of them. When I'm looking at the earnings report, I can see that they're missing on almost every single number in there. They're missing analyst estimates on EBIT, and this is the second quarter in a row they're doing that. So they're also issuing this warning that they're going to have lower sales than previously anticipated. So overall, we're just looking at some of the same old weak stories that we've seen for the last few quarters for Novo Nordisk.
The same old weak story. That's pretty damning, Sarah. The competition is clearly there with Eli Lilly. How much of this is about the competitive threat versus demand in key markets in the US? And is there an opportunity? If Novo gets this deal across the line with Metsera and they're bidding fiercely alongside Pfizer and the clock is ticking, does that put a floor under things for Novo?
Those are really, really good questions. I think at the moment we're just looking at this bidding war. We're asking questions. Can they win? Will they get it through the FTC? Why are they doing it? Is it really because they want Metsera badly because it fits into the pipeline? Or is it also to take Pfizer out of the competition? Some of the things I'm hearing a lot from analysts at the moment. We have a media call later today. There's also some interviews with the new CEO. And this is the first quarter where he is CEO, Mike Duster. So all these questions will undoubtedly be some of the main focus for him today. This is a company where we're looking at Novo Nordisk. Over the last 6 months, they ousted their CEO. They have a new CEO that's come in quite aggressive, all guns blazing. They had a major reshuffle of the board. They laid off 9,000 people, and now they're also trying to get into a bidding war with Pfizer. So some people are worrying they're trying too much too fast and may break something along the way. Other people are saying this was necessary. Novo really needed that shakeup to become competitive again.
OK, well, we'll be hearing, of course, from the CEO later in the show. Bloomberg's Copenhagen Bureau Chief Sarah Sjolin with the take there, the details, the context around the earnings from Novo Nordisk. Sarah, thank you so much for that update. We're going to speak, as I mentioned, to the CEO of Novo Nordisk, 9:15 a.m. UK time. Do not miss that interview. Now to some other stories making the news today. Norwegian lawmakers have approved changing the ethics rules for the country's $2.1 trillion sovereign wealth fund to reduce the risk of a forced divestment of holdings in global tech companies. The measures pave the way for raising the bar to sell out of companies like Microsoft, Amazon and Alphabet. Such a step could be prompted by the fund's external ethics advisor. That advisor is currently going through big tech holdings to ensure the fund meets UN rules for ethical investment over the war in Gaza. UK Chancellor Rachel Reeves is expected to meet top insurance chiefs in Downing Street today as she seeks to encourage more investment in the city ahead of her budget later this month. The talks with leaders from Lloyd's of London, Swiss Re, Aviva and others will focus on unlocking capital and boosting growth. Separately, a think tank is warning Reeves will need to run primary budget surpluses to get a grip on the country's unsustainable debt trajectory. The National Institute of Economic and Social Research says an extra £50 billion is needed to guard against future fiscal shocks. Coming up, the KPMG annual survey of CEOs showing concerns about the economy, but enthusiasm for AI. KPMG's global head of clients and markets talks us through the findings and what they tell us about how CEOs are positioning around AI and trying to ensure their workforce is match fit for that revolution. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, an annual survey of global CEOs suggests confidence in the global economy has dropped to 68%, its lowest level since 2021. But business leaders are clear that AI is their top investment priority for the year ahead. We're joined now by Regina Mayer, KPMG's global head of clients and markets. This is a KPMG survey, of course, surveying 1,350 CEOs from around 11 countries. Regina, thank you for your time. Talk to us about the AI piece of this then. It's interesting that the views on the global economy have softened and become a little bit more cautious, but that emphasis on AI being the top priority for most CEOs.
See that as a way to drive further growth when you see labor rates have actually been decoupled from growth and productivity. So some of the really interesting statistics, in addition to the number of folks that say it's a top investment priority, we have 69% of CEOs that say they can spend up to 20% of their IT operating budgets, and 67% now say they can see a return on investment in the next 1 to 3 years, whereas last year that was 3 to 5 years. So clearly we've got a lot of experimentation that's leading to real life use cases and improvements in efficiency and effectiveness. And they're seeing that as a way to drive further growth given these really challenging economic times.
Well, that's crucial that you zero in on the return on investment piece, because we know investors are concerned about that. And they are now, right. CEOs are now shrinking that time frame. They're becoming more confident that the investments they're making in AI will actually lead to gains in terms of upside for the balance sheet.
Because they can see it now. So we've moved out of the it's fun to play with these tools, or I've got a small use case that saves an hour or two. And now with agentic AI and large ability to use massive data bases and the ability to do end-to-end orchestrated agentic processing. I'm not a technologist, but that is driving real life bottom line savings. It's not immediate. We're still 1 to 3 years out, but you can see the optimism growing about what the potential of these tools can drive. And that's coupled against challenges on the labor market. So that's the other interesting dynamic that we're watching, how AI interfaces with humans and what that does ultimately for the workforce of the future.
Yeah, and I want to get your take on that and what the survey tells us about the impact on jobs. Before I get there, though, in terms of that return on investment piece, the adoption, did CEOs say anything about the challenges around adoption? There are so many different choices in terms of what they could be implementing, whether they build the solutions in-house, whether they buy externally, concerns maybe about ethics, about data, about security. Where are we? Do we have clarity on where CEOs and how they're positioned, how they're thinking about actually adopting some of these solutions?
I think we're really nascent in that whole conversation, and I've characterized it as the CEO's trilemma. How do you assure access and use? So they've dealt with access. It's pretty ubiquitously deployed now, but we still have low levels of adoption rate with certain categories of workers. The second is, how do you get the right talent and the workforce to use those tools, and how do you upskill and retrain them to take advantage of that? And then there's the whole regulatory framework, ethics. We did another survey with the University of Melbourne and found that 66% of folks use AI without verifying accuracy. So we know that there's challenges across all three dimensions, and we're working with clients that are just trying to figure out what that strategy is, how do they take it forward, and how do they deploy it. That's where the 20% of their IT budgets going to AI is really significant finding in this survey.
And Regina, you touched on the labour market in your previous answer. Are these CEOs chomping at the bit to use AI to slash their workforce and their headcounts?
I don't see it as an employee or workforce reduction play. We have actually labor shortages and a change in demographics. I'm sitting here in Tokyo with a country that's faced with a significant labor shortage. So how does AI start to fill that gap? And how do we change the current workforce to be able to take advantage of these tools of the future? And how do we leverage experienced employees to train the next generation who don't have that experience, but then can be further enabled by AI? There's huge opportunity, but it's going to be really hard to get that balance right. And whichever companies get that right sooner rather than later, I think they will be dominant in their sectors.
What are the biggest constraints in terms of hiring when it comes to expertise in AI?
So they are worried. That was one of the findings, was 70% are worried about the ability to find that talent and attract it. We've seen some of the examples of looking for that unicorn-like talent. We know that there's not a lot of folks that are completely versed in these tools. And again, I go back to experience is incredibly important. It's not just technology. And we advocate strongly that there has to be a human in the loop. So how do we effectively broadly deploy it across a broad group of folks? How do we use agents to make some of the more mundane tasks a lot more effective and efficient? And then how do we unlock that brain power to improve our customer experience, to reduce costs in terms of our manufacturing, to decarbonize our supply chains, and turn that insight and innovation into other bigger picture things that are harder to tackle?
OK. Regina Mayer, we appreciate your time. On the back of that survey, KPMG's global head of clients and markets on how CEOs are thinking about AI adoption and the return on investment. Now, in other news, several German subsidiaries of First Brands Group have filed for insolvency in a sign that the fallout from the US car parts supplier's bankruptcy is rippling through to its foreign operations. The auto parts maker's European units have been hit by weaker car production and tighter credit conditions. Talks are underway with major automakers as administrators seek buyers. There's plenty more coming up. We're going to give you a deep dive in terms of how the Democrats have come through with some success in the voting in the last 24 hours or so and how that could position them for the midterms next year. Stay with us. This is Bloomberg.
New York, tonight you have delivered a mandate for change, a mandate for a new kind of politics, a mandate for a city we can afford, and a mandate for a government that delivers exactly that.
New York City Mayor-elect Zohran Mamdani speaking there in the last couple of hours. And it wasn't just a victory for the Democrats in New York, Social Democrat, of course, when it comes to Mamdani, but also the Democrats in Virginia, in New Jersey, and down-ballot races as well in Pennsylvania and Georgia. And if we take a step back, here is how the prospects for the Democrats and the Republicans and President Trump himself have adjusted since March of this year. Let's start with President Trump's own personal approval ratings, jobber ratings. That's the white line. You can see a pretty sharp drop just in the last few weeks or so in the month of October. In terms of the red line, that represents the Republicans in terms of congressional voter intentions and polling data has edged lower as well. And the Democrats have ticked up. So the prospects, of course, this is a bit of a litmus test in the last 24 hours for how things may turn out, possibly, when it comes to the midterms. But the prospects for the Democrats on the results of the last 24 hours, slightly brighter, certainly brighter than they were, of course, shortly after the election of President Trump and the inauguration. Let's flip the board and have a look at what's happening in terms of the government shutdown, because that could be one of the factors that's weighing on voters' minds. We are now at a record shutdown. We've never seen a shutdown as long as this, 36 straight days. The second longest shutdown was under Trump in his first administration, of course. And there are a few signs at this point that the two sides are going to resolve this issue. A record when it comes to the shutdown. Let's flip the board and briefly look at a very different picture. This is in terms of the crypto and Bitcoin and the sell-off that we've seen. Interestingly, when you take a step back as well, you could have gained about as much by being exposed to US Treasuries year to date in terms of the gains of about 6% versus Bitcoin, given the sell-off that we've seen and the liquidation. Around 400,000 coins liquidated by some of the biggest holders. That accounts for about $45 billion worth of Bitcoin. It crossed below 100,000 yesterday. It's back above that today. Watch crypto then on some of those adjustments. We're going to be speaking to the CEO of Novo Nordisk, by the way, 9:15 a.m. UK time. The opening trade, though, is up next. This is Bloomberg.